Welcome to our weekly market update. It's Friday the 17th of July. My name is Chris Marshall. I'm Head of Investment Strategy here at Dragon Investment Managers. As we look around the world this week, we see that most of the major equity indices are coming into Friday's trading session with some gains for the week. We have, though, seen some risk-off mood, and this coming from a combination of factors, including just some viral uptick in certain geographies, as well as coupled with, unfortunately, higher hospitalisation and death rates. We're also seeing, of course, earnings season upon us, and this is giving some mixed results, really, and really just trying to put this into perspective of what it might mean for the next couple of quarters. So let's just have a think about some of the things driving markets. Well, certainly we have a couple of really key policy decisions. The first is around central banking. So we saw ECB President Christine Lagarde step out yesterday and really just give an update of where she feels the ECB is in relation to the markets and what her outlook is. Now, of course, she was going to come out and say that the outlook is uncertain, and she was going to always say that she feels that the policy tools the ECB have are sufficient to maintain liquidity. The bit that really kind of caught a lot of people's eye was this disagreement within the ECB afterwards. That Christine Lagarde seemed to suggest that she had full intention to use the PEPP program, so that's the Pandemic Emergency Purchase Program, to use its full capabilities and to deploy all of the assets that she can under there. It seemed to be that a lot of the other members of the ECB hadn't intentionally or didn't realise or had disagreement over whether that should be done. And so that's going to be very interesting over the next few days to just see kind of how that happens, because of course it is a key programme and it's a key policy tool for the ECB, and it is a huge amount of possible liquidity for markets. So that's one factor that's coming through. The other is, of course, around the fiscal programme. So we have both the European Union and US Congress due to really sit down and talk over the next few days about what the next stage of fiscal programmes will look like. We have to remember that when we go back, the current ones in play really were only temporary measures. They were good enough to see us through for maybe 2 or 3 months, but that time is now up. Certainly in the US, there's a lot of forbearance programs around auto loans and mortgages and credit cards, which have helped to stave off solvency problems and bankruptcy. But of course, they are starting to come due again, because those programs, again, as I said, were really only temporary measures set up in the very early days of the pandemic. So those are two of the things really that the markets are going to be focused on. We also have to really keep a close eye on initial jobless claims. The market doesn't seem to be too bothered about these very high numbers that we see every week now. So yesterday we saw in the US another print of 1.3 million initial jobless claims. And because we come down from the 6 million per week right at the start, the market seems to be saying, well, okay, this is positive change. We're seeing a reducing amount of new initial jobless claims. However, we've got to put this back into the perspective of history. And when we look back at the Great Financial Crisis, of course, we saw that the highest number then was about 600,000. So we're still nearly double that amount. And we're at a stage where the economies are meant to be reopening. So we do have to pay an awful lot of heed to this and time to this. And also we have to sometimes adjust the numbers that we're given. Now, the 1.3 million yesterday was what we would call seasonally adjusted. And this makes sense in a normal season or a normal annual cycle, where there are fluctuations to the job count numbers, and it's right to seasonally adjust them to make them make sense compared to previous periods. This year is different, however, because we haven't had a typical season. And when we actually look at the raw data behind it, instead of being 1.3 million, actually it was 1.5 million. So we saw that initial jobless claims number actually tick up yesterday. So this is, again, just another little signal that all is not quite well in the real economy. And while the market is still in a positive trend, there are some red flags that we really need to pay close attention to, just to make sure that the risk that actually the market is perhaps not pricing in, is it still worth the reward that we see coming through? And so these are some of the things which really I think markets are going to be very uncertain about. They're going to pay a lot of attention to, and there's going to be increased volatility, or at least the high volatility we see is not likely to go away just yet. So as we kind of wrap this up, I think there's some very important data to be looking at, and that's around risk metrics. It's certainly kind of the overnight interest rate metrics, and also the spreads between different issuance of bonds. Really, these give us a sign of, is there any stress within the financial system, and also around some of the CDS stuff. Earnings, of course, are going to play into volatility in markets. We've seen some of the banks come out post earnings above expectations. There seems to be more favouring profits and revenues from the banks with larger trading arms rather than traditional banking services. So that's an interesting development, propping up some of their revenues as well. And also we saw some stuff around the tech sector yesterday. So there's an awful lot going on. As I said, the market tape and the price action is still in a positive trend, but there are some red flags underneath that we will be watching very carefully over the next few days and weeks. So that kind of just gives us a summary of what some of the things going on are really driving markets and how they're affecting things. So from myself and all my team at Dragon Investment Managers, I wish you a very healthy and happy weekend, and hopefully we'll see you again next week.